Well, why don't we go ahead and get started? And first of all, I'd like to welcome everybody that's on the call today. Thank you for attending the Federal Resources for Rural-Based Businesses. I'm Steve Schillig with the Small Business Development Center at Kent State University, Tuscarawas. Pleased to have Randy Monhemius from the USDA, Mark Hansel and Ray Graves from the SBA. Today's session will provide some background on the SBDC, the USDA, and the SBA, focusing on resources available to small business owners. A couple of house cleaning items. We have a large number of attendees. We had over 95 register for the event on last count. Because of that, we will or have muted the attendees. And we ask that you stay unmute for the benefit of the group and the presenters. So if you're not muted now, if you would hit your microphone and mute yourself, we would certainly appreciate it. If you have questions, please go to the chat room. That's on the upper ribbon, most likely on your screen under the word chat, and feel free to type in your questions, comments, and we'll do our best to respond to those questions. This session is being recorded and will be available on our website, and our website is sbdcksut.org. And Deanna, maybe you'll type that in the chat room for those that didn't get all the information. I'll kick off the session today by discussing the Small Business Development Center, also known as the SBDC. There's an SBDC in every county, every state, and multiple countries. Our two primary functions are consulting, which we do on a confidential, no-charge basis, and we also offer training and workshops. We've offered a variety of workshops in the past, but our staple program is really the monthly small business orientation class for those individuals that have not been in business before. Our center covers 9 counties: Carroll, Columbiana, Coshocton, Harrison, Holmes, Jefferson, Stark, Tuscarawas, and Wayne County. We define our clients into 2 categories: those that have never been in business and come to us with maybe just an idea, and then obviously the existing business owner is the other classification. Wanted to share with you some examples of support that we provide those newbies, those individuals that have no prior business experience but come to us with an idea. Some of the things that we've helped them with is the business plan. And when I say the business plan, I mean, we help them determine if there's a market for their product or service. We help them identify their own competitive advantage, what they do better, maybe faster or cheaper than the competition. We help them analyze the competition. We want to make sure that they have some idea or concept why a customer would change their buying habits and start to buy from them. We also identify the resources that newbie would need and where those resources are coming from. If they decide or when they decide to move forward with a business, we've assisted those individuals with making sure they were compliant with the state and the federal government when it comes to licenses, permits, and taxes. We help them and encourage them to develop an accounting or bookkeeping system to track their transactions. We certainly show them how to best market and promote their services. And then if and when they hire an employee, we certainly help them with that process as well, so they are compliant with the state of Ohio. These are just a few examples of our support. None of these steps are necessarily difficult on their own, but because we've done it before and we have the resources, we believe that we can save the client time and aggravation. So we also work with existing businesses. Some examples of support that we provided include an overall assessment, which identifies the existing business's challenges, their goals, and next steps. We've offered comprehensive marketing research for a client before they decide to go and make a major capital outlay. We worked with both the buyers and the sellers in a transaction. We've navigated those clients through the banking industry to access the capital that they need to operate. We've helped customers determine, or clients determine, customer profitability, which will most likely lead to the firing of some customers, especially the unprofitable relationships. We recently helped a cookie baker understand their true cost of goods and maybe make better decisions on pricing from that point forward. We've helped existing customers set up budgets and then monitor and measure their performance. We've helped them calculate a break-even sales. We've provided marketing assistance by installing a plan and making sure they follow it. Our HR expert has helped with employee handbooks, new and existing, to make sure that that handbook is in compliant. We've verified that their personnel files are set up properly. We've encouraged the calculation of an employee compensation package. We've shared best practices for the recruiting and retaining of employees. And I'll tell you that we don't have any magic bullets, but we do have some creative ways that have worked. We've helped with the preliminary steps in a succession plan, encourage that business owner to make sure that he or she has pre-planned to make sure that the right pieces are in place before that succession plan can go forward. We've assisted clients and businesses with QuickBooks, both new users and existing users. So again, these are just a few examples of where we assisted an existing business owner. All of this support, along with the support we provide the clients to new to business, was done on a confidential, no-cost basis. If you've never used the SBDC, I would encourage you to reach out to one now and start that conversation. If you are a current SBDC client, good for you. And I would suggest that you continue to use that resource as a way to make sure your business is in compliance and grows profitably. You can contact me directly if you're not sure which SBD center is close to you. I'll put my contact information in the chat so that you have that for future reference. Before we go to the next presenter, I'd ask Mark if there's any questions from the audience.
Thanks, Steve. Yes, an inquiry here relative to when the recording link might be made available. I suspect Deanna could answer that.
Yes, it'll probably be a week before that comes out. It has to go through a process.
Okay, thanks. And that's the only question so far.
Okay, good. I must have given enough thorough information, so that's good to know. So next up, I'd like to introduce you to Randy Monhemius. Randy has been with the USDA Rural Development for 34 years, initially working with single-family housing loans and farm program loans. Since 1996, he has been involved with the Business and Industry Loan Guarantee Program and has also been involved with the Rural Energy for America program, which is also known as REAP, since its inception in the 2002 Farm Bill. He's looking forward to meeting with new businesses to further discuss these programs as funding continues to increase across the many programs administered by the Rural Development. Randy?
Steve, if I could interrupt for a moment, we do have another question. Sorry, Randy, but we have an inquiry here. If we are considering purchasing a West Virginia business, what SBDC should we go to, our area or in West Virginia?
I would say start with the local SBDC center, Kelly. So I think that's the OU center, if I recall. Start with them. It never hurts to maybe reach out to the SBDC in West Virginia to see if there's resources there or information that they can provide you to help with that process. So, but I would always start with the local one first, and then if it's not the right fit, then they'll certainly connect you with the one that makes the most sense. Okay. I'll go ahead and shut my mic off.
Thank you, Steve. So that is somewhat of a good segue into our agency. I work for the U.S. Department of Agriculture, Rural Development. We have offices in every state. So whether you have a project here in Ohio or a project in West Virginia, the programs are across the country, so they are very similar in terms of they are the same programs throughout the country, but each office services those programs within their state. So if you have a project in West Virginia, I can certainly put you in contact with the staff there in West Virginia who could help out at least with our programs. From that standpoint, our agency, Rural Development, has a variety of different programs. I'm going to address business programs, but certainly if you have a need for single-family housing, multifamily housing, there's community facility programs, water and wastewater programs. There's a whole litany of different programs that are that exist basically to really develop a community from the ground up. So certainly if you have questions in regards to any of those types of projects, let me know and I can point you in the right direction. Next slide, please. So first and foremost, we're going to start off with our loan guarantee programs. There are several loan guarantee programs that I will try and cover today. 4 of these programs are consolidated under the 1RD loan guarantee program. We have our business and industry loan guarantee program, similar to the 7A program, which Mark will address here in a little bit. We have Rural Energy for America program. That's a loan guarantee that is for renewable energy development and also energy efficiency improvements. There's also community facility programs, loan guarantees, which is really designed to assist communities that want to expand essential services, fire stations, police stations, libraries, museums. Those essential community facilities within a community can be addressed through our community facilities loan guarantee. And we also have water and wastewater programs, which is a program that looks to help communities install water and wastewater, as it states. I'll cover the first 2, the business industry loan guarantee program and the Rural Energy for America program loan guarantees a little bit more in depth. The other 2, if you do have needs in a community facility or water and wastewater, let me know and I can point you in the right direction.
Randy,
we also, yes.
Randy, I'm sorry. Does that cover geothermal HVA installations?
It does. Excuse me. Rural Energy for America program, also known as REAP, covers geothermal and HVAC as long as it is an upgrade. So it's an energy efficiency improvement. Yes, thank you. We also have food supply chain loan guarantees, which is designed to increase the food supply chain capacity. And I'll address that in a little bit too. Rural Energy for America program, that is a grant. Last point is a value-added producer grant, and I do have slides on each of these. Next slide, please. So first and foremost, let me cover the business and industry loan guarantee program. This is a guarantee our agency provides to a bank. The bank makes the loan to the business. With that guarantee, we hope that the lender can provide a better interest rate and a longer term than they could without the guarantee. Basically, we are assuming up to 80% of the risk of that debt. The project has to be in a rural area, and I do have maps showing what is considered to be a rural area. For Eastern Ohio, basically everything south of Canton all the way to the river would be considered eligible area for our programs. Like I said, this is an 80% guarantee of loans up to $25 million. So what we try and do in these rural areas is look for these projects that really don't fit what the SBA has to offer. You know, and again, Mark will address this in more detail, but look at the SBA does a very good job with projects, 100,000, 200,000, 500,000, and I think up to $5 million. That is a very good area that SBA works in, and we really look at projects that are $2 million, $5 million, $10 million projects, with a lender looking to increase, have the ability to increase their exposure or limit their exposure on some of these larger loans. So that's kind of what we look for. Loans do have to be fully collateralized. Like I said, we can look at extended terms, real estate, 30 years, 15 years on machinery and equipment. We do have some equity requirements for an existing business, 10%, new businesses, 20%. So there are some requirements there. Next slide, please. This is what we can use these funds for. Basically anything to enlarge a business, look at expansion, construction of buildings, purchase of machinery and equipment, inventory, refinancing when there are new jobs that will be put into place as a result of this debt refinancing. So these are just some of the things we can do with these loan guarantee funds. So really we're looking for economic development in a rural area using this loan guarantee to encourage lenders to make loans to rural businesses. Next slide, please. We can be involved in construction projects, so we can issue that guarantee prior to construction. Helps that lender to feel more comfortable in getting involved in construction projects, eliminate some of that risk involved with the start of the construction. We're basically looking for, in terms of underwriting, we have to look at applicants and businesses that are willing to repay this debt. And so we look at this, the 5 C's of credit, basically character, capacity, capital, collateral, conditions. You have to have a willingness to repay that debt. That business has to be willing to repay the debt. They have to have the ability to repay the debt based on cash flows and sales and income generated. They have to have capital. They have to have some commitment to this business. So that's why we look for 10 to 20% equity into the business. Collateral, we're looking for assets that can secure the debt. We cannot make loans that are unsecured, so there has to be a commitment from the owners to pledge this collateral. So if this ever goes, if the loan ever goes bad, there is collateral to collect against and pay down that debt. And then we do have conditions looking at the business environment and the industry and making sure it's a business that, or an industry that is growing and a business that is growing. Next slide, please. As I mentioned, there are areas where we can and cannot lend. We are looking specifically at the rural areas for Ohio, at least here from this office. The right-hand map would be those areas that are eligible are in white. Those areas that are not eligible for our assistance are in the orange colored. So if you see there, Canton is not eligible, Youngstown, Akron, those areas are not eligible for our assistance. There is a mapping system that we use. The link is provided there. Certainly, you can check those areas for eligibility, but pretty much anything Southeast Ohio is eligible for our assistance. Next slide, please. So as I mentioned, there's a food supply chain loan guarantee, and this is really designed to assist the expansion of the food supply chain. We're not looking at agricultural production. We're not looking at retail. So we're excluding the grocery stores, we're excluding the farms, and we're looking at the middle of that food supply chain. So once it leaves the farm gate, what type of processing, what manufacturing, is there storage involved, transportation, and so forth. So that's really what we're looking for in this program, is to expand that middle section of the food supply chain. The benefit of this program is that there are no fees associated with this program, and there's no rural area restrictions. So we can look at using this program in urban areas and rural locations. And the encouraging part of this is there's no fees involved with this. So if you have a project in Canton, Ohio, which is ineligible for our business and industry loan guarantee program. But this is a food processor that is looking to expand their operations. This program can provide a loan guarantee to a lender to encourage them to make a loan for this business. These loan guarantees are up to $40 million, and there's a 90% guarantee associated with this. So it even further reduces the bank's risk on these projects because of the higher guarantee percentage. There's a larger loan involved and so forth. So this is a very good program to help these food processors and in that middle of the food supply chain expand production. Next slide, please. So what I just covered is our loan guarantee programs. As I mentioned, there's several loan guarantee programs. I have 2 grant programs, which are probably of interest to small businesses in these rural areas. The first one is the Rural Energy for America program grant. This is a grant of up to 25% of the project cost. As Steve mentioned earlier, geothermal is eligible. We're looking at could possibly be HVAC upgrades, wind, solar, other energy efficiency improvements could be lighting, windows, doors, anything that would be included within that energy audit could be eligible for this grant. The grant right now is 25% of the project cost. With the passage of the Inflation Reduction Act that the president signed here a couple of weeks ago, there is the possibility of increased funding for this program, as well as an increase in the percentage of eligible project costs. So instead of 25%, we could be looking at a larger percentage of costs being covered by this program, as well as additional funding for this program on an annual basis for the next 10 years. Right now, the maximum is $500,000 or 25% of a project cost, whichever is greater. Energy efficiency is $250,000 or 25%, and that's as of today. So these are all things that are somewhat subject to change, but this is a program that will be in effect for the next 10 years, to the best of my knowledge. Applications for this program are due October 31st and March 31st of every year. And again, just some examples down below of what we can cover through this program. And again, energy efficiency improvement for lighting, HVAC, refrigeration systems. If you have a grocery store, that might be applicable there. Convenience store, things like that. Renewable energy, solar. Solar is certainly a big factor and talked about widely anymore, but solar panels could be something we could cover. Geothermal projects, very efficient in the generation of energy. Biomass, I know Southeast Ohio has a pretty strong biomass focused industry. And certainly if we're looking at biomass, wood-fired boilers, could be generation of wood pellets, that could qualify for this program. Next slide, please.
Randy, before you move
Yes.
forward, I will leave the response to the expert, but are churches eligible?
That's a good question. Churches are not eligible for this program. So the Rural Energy for America program, you either have to be a rural small for-profit business or an agriculture producer. So you have to be fall within one of those 2 categories. Nonprofits are not eligible, so that would include churches, universities, college, schools, municipal buildings. Those are all not eligible for this program. But when you start talking about businesses, this could be a small for-profit business in a rural downtown location that is looking for energy efficiency improvements. This could be a program that addresses that. That was a very good question. Thank you.
Randy, and then how about investment properties? A landlord, can they apply?
So we cannot do any type of residential, but if there is a landlord that has a commercial building and they want to install solar or make energy efficiency improvements, that is something that we can do. Depending on how that ownership structure has been established, who's benefiting from this installation. It could be the landlord if they're paying the bills, or it could be the the tenant who's paying the bills, but as long as we know what that relationship is, we can certainly look at some type of assistance there. Yes. I appreciate the questions. Thank you. So I did mention earlier, this is the Rural Energy for America program, does have a loan guarantee associated with it. Again, very similar in terms of what the eligible project costs are, or what the eligible types of projects would be. Energy efficiency improvements, renewable energy, still have to qualify for the loan guarantees just as you would for the grants. Rural, small, for-profit business, or an agricultural producer. So those are some of the things you have to consider. But again, this is just another way to finance some of these improvements that a small business or a farmer is looking to do. So certainly it is possible to combine the loan guarantee program with the grant and finance up to 75% of the project cost. Next slide, please. Last grant I want to talk about, your last program I wanted to discuss is our value-added producer grant, and this is designed specifically to help farmers add value to the products that they raise. So we have working capital, and we also have planning grants. So if you have a working capital grant, that would be for, having the resources to convert that product that you've grown to a final product that you're going to sell to a consumer, and it can pay for, labor. If you have a canning operation, it can provide resources for the canning operation, for electricity, overhead, all of those types of costs. If you're looking at planning, you have an idea and you want to vet that idea into a actual process, we do have planning grants that can look at assisting there. This is a 50% grant, so if you get a $10,000 grant for a value-added producer grant, you have to match it with $10,000 in cash as well. Again, just some examples of planning activities, feasibility studies, business plans, which Steve did address from what the SBA or the SBDC can help you with. Then we also have working capital expenses there, processing costs, marketing costs, inventory, and salaries. Next slide, please. Here are just a few examples of value-added producer grants, again, providing working capital for the expansion of markets for freezer beef. Not the actual production of the beef or chicken, but it's the marketing, the processing of that to that final product to sell to the consumer. We also have planting grants. So if you are raising fruits and vegetables and you want to convert that into jams and jellies, that's something this program could be used for. So you can develop that business plan or feasibility study, looking at those types of things and move forward. So it's a good program. Really helps those farmers who are interested in converting what they grow to that final product. And again, the idea is to keep more of that income on the farm itself. And the last slide, if you advance that one more, is our contacts for Ohio. Michael Rutherford is our program director, and then it lists all the other specialists here in Ohio. Danielle Fry, she is our specialist in our Massillon office, and certainly will handle any calls for Northeast Ohio. Southeast Ohio would be Marcy Lucas. She's the last one there, and certainly if you have questions, you can address those to her or Danielle or myself, and we'd be happy to answer anything you might have. And that should wrap it up for me. So certainly if you have questions, let me know, or I can answer anything. Randy,
we do have a question. Could the value-added grant be used by a rendering operation?
So the value-added producer grant, the person who raises the product is the applicant. So a rendering plant probably would not be eligible simply because they are taking that product in and processing it further. They probably would not control that from the very start of the process, raising the animals through that process. So a rendering plant probably would not be eligible. However, I'll take that one step further, and if they're interested, you have a lot of costs within a rendering plant. Can we look at energy efficiency improvements? Are there ways to make that plant more efficient through lighting or processes, equipment, motors, you name it? There's probably quite a bit of power that is used, and the Rural Energy for America program could be an opportunity to lessen the energy load of that plant.
Very good. Well, thank you, Randy. I
Thank
think
you.
that's the questions. And if you have questions as we go through the last presentation, feel free to put them in the chat room. We will address them. Just a reminder that this session is being recorded. It will be available on our website, sbdcksut.org, and Randy's PowerPoint presentation will also be emailed to you in the next days, in the next few days. So again, Randy, thank you. Our final presenter today is Mark Hansel from the SBA. Mark is a Lenders Relations Specialist with the Cleveland District Office of the U.S. Small Business Administration. Beginning as a commercial loan specialist with the SBA, he is now responsible for marketing and managing relations with banks, SBA 504 lenders, SCORE chapters, and other resource partners in Portage, Summit, Wayne, Medina, Stark, Tuscarawas, and Harrison counties. Before joining the SBA in 1996, Mark worked in the field of economic development and finance for Summit County, where he helped organize the first edition of the Akron Business Incubator, now the Bounce Innovation Hub. An SBA 504 lender, now Cascade Capital, and Summit County's original Enterprise Zones program. He holds a Bachelor and Master of Arts degrees from the University of Akron. Mark received additional training through the Ohio School of Banking, National Development Council, National Association of Development Companies, and the SBA. So Mark, thanks for joining us, and I'll turn it over to you.
Well, thanks, Steve. And I'm also joined by Ray Graves, who's the lead lender relations specialist with the Cleveland District Office, sometimes called the Northern Ohio District Office at this point. So, Ray, feel free to chime in on any of these slides here. If we could go to the first slide, please. Thanks, Deanna. If you wanted to boil the SBA down into its core functions, I think it would be 3 C's and a D. One of the C's stands for credit, because we guarantee loans by and large, mainly through banks and certified development companies. Certified development companies handle our 504 loan program. The second C would be counseling, and we accomplish this mission through our affiliates like SCORE and small business development centers, such as Steve's. The third C would be contracting. A number of businesses would like to contract with the public sector, that is to say, bid on public work. And we do have external organizations that are resource partners, known as Procurement Technical Assistance Centers, or PTACs. And they're staffed with able people who can hold hands with the applicant, so to speak, and guide them through the process of public sector bidding. The last element would be D for disaster, and disaster is a agency within the agency, so to speak, and disaster handles disaster loans. This is where a public disaster is declared and disaster swings into operation. They can make loans directly. Most recently, they've been in charge of the economic injury disaster loan for the COVID program. So 3 C's and a D. Next slide, please. What does SBA do? Well, normally through our 7A program, we guarantee loans and also the 504 loan program. Our usual limit or maximum is $5 million. That is to say, that's the largest loan we can guarantee. Underneath the 7A umbrella, which is our standard loan guarantee program, we have a special program known as Express, and Express limits out at $500,000. So $500,000 is the maximum Express loan that a bank can make. Again, our guarantees are done through our bank lending partners by and large. Many banks have what we call delegated authority, which means to say they stand in the shoes of the SBA and approve loans on our behalf. Two delegated authority programs would be PLP, which stands for Preferred Lender Program, and the Express program. Banks with delegated authority can turn around an SBA deal in quick fashion once they've thoroughly underwritten the deal. Promise of repayment ability is a must with the agency. We can be short on collateral in any given situation, but we need to see that promise of repayment ability. And if we're talking about startups, well, this is where Steve Schillig shines, because he can put together a set of projections to assist the borrower there. Ray, did you have anything to say at this point?
No, you're doing great. Please proceed.
Oh, okay. Let's go to the next slide, please. Yeah, why and where do banks use the SBA? Well, here are some of the areas where banks like to use us. Startups and new businesses, because of the inherent risk there. There is no track record with the business. It's all projections based. Buying a business, including partner buyouts, is another area where lenders use us, because usually you pay a premium, you as the buyer for the business, and that premium comes in the shape of goodwill. And ordinarily, banks don't like goodwill. That's the proverbial airball. This is where SBA comes in, because we can cover that so long as the business valuation supports the purchase price there. So buying a business is another area where banks like to use us. Collateral shortfalls. You know, if Steve Schillig decided he was getting out of the SBDC network and going to open a pizza shop, well, he may need to do leasehold improvements to someone else's property. That usually generates a collateral shortfall. So collateral shortfalls would be another area where lenders like to use the SBA. Miscellaneous issues like credit or industry. You know, maybe the lender is not too fond of bars and restaurants. Well, in that case, they may like it enough to do it if the SBA gets involved there. So there are a variety of issues why lenders use the SBA. Next slide, please.
Mark, before you move to the next slide,
yeah.
You mentioned business valuation. Is there a dollar amount where the either the bank or the SBA requires a business valuation?
Ray, I think you might have to help me out on this. It used to be $250. Anything under $250, a bank could do their own internal valuation for a business. I think that's moved up to $350.
I thought it was $250 as well, Mark. So I'll have to do quick research while you're talking, and I can be your lifeline here, and I'll come back to you. I'll let you know what the SOP says.
Thanks. Yeah, eligibility. The deal has to be eligible. You know, we can talk about credit and collateral, but first of all, we're going to have to talk about eligibility with the lender, or the lender with the would-be borrower there, because if the deal's not eligible, it doesn't go anywhere as far as SBA is concerned. And the borrower needs to be small. In our definition of small, we have actually two definitions. One, if the tangible net worth of the borrowing business is no more than $15 million, and their net profit after tax on average for the past 2 years is no larger than $5 million, they're small. And that's the so-called alternate size standard. The other size standard is really based upon the industry type. The NAICS code that's assigned to the borrower. And that usually depends upon number of employees or annual receipts or revenues there. So either way, the business has got to meet one of the definitions of being small in order for us to proceed. Other eligibility issues pertain to the owners of the business. Do the owners have good character? There's a Form 1919 and has certain sensitive questions such as, have you ever been convicted of, or are you currently on parole or probation? Essentially, that's how we determine satisfactory character. Personal credit is another issue there, because if a borrower has a defaulted federally assisted loan, such as a VA FHA mortgage or student loan, we could have a problem, or we will have a problem with that. As far as the ownership makeup, at least 51% of the borrower needs to be either U.S. citizen or lawful permanent resident. So we do have eligibility issues that pertain to the owners of the business. Next slide, please. Other eligibility issues, organized for profit. And I think Randy can deal with not-for-profits, but ordinarily we deal with for-profits. We did make some exceptions relative to the Paycheck Protection Program on not-for-profits, but under our standard 7A and 504 programs, we can only deal with for-profit enterprises. We also only deal with non-passive investments. In other words, we can't do rental housing or apartments. However, we are okay with self-storage. So self-storage is okay as far as we're concerned, but otherwise passive investments are out. Certain types of business like gambling or lending or bail bonds, we can't get involved with. But so we do have some limitations there that fall under the eligibility considerations. And I see, Ray, did you get the answer to that then?
Yeah, unless there's been some notice that's been published since, the standard operating procedure that we work under still lists $250,000 as the threshold after which a business valuation would be required. So again, like $250,000 of goodwill, if that's transferring in some kind of a business acquisition or partner buyout scenario, SBA would be looking for a third-party valuation for that more substantial transaction. But I also would note that anytime you're doing business valuation, it might be just prudent lending to have a third-party valuation done, and that especially is the case if there's a pre-existing relationship between the buyer and the seller. Lenders are typically going to be looking for some kind of a third-party valuation, sort of no matter what the cost is. But for what it's worth, the agency is going to require it after that $250,000 and up figure.
Thanks, Ray. Next slide, please.
And Mark, we got another question. Who would be the contact for Belmont County? And I'm not sure if you contact for the SBA, for the bank, or for the SBDC. So Kelly, maybe you can tell us specifically what you're in need of. Go ahead, Mark. I'll get back to that question.
Okay, great. Interest rates. An SBA guarantee allows access to capital. We're not really a low interest rate program. In other words, the bank without the SBA guarantee tells us that they're not going to do the deal without us, that they can't get it done conventionally. We do set limits, however, on what lenders or banks can charge the borrower. And the limits are now based on loan size, and there are different limitations. And when I'm talking about limits, I'm talking about ceilings, the maximum rates that apply. And we do have different limits for fixed or variable rate loans here. Next slide, please. Yeah, Ray, did you want to jump in here? This is kind of a sensitive issue, so I'll let Ray bear the brunt of you know, the bad news here.
Well, I don't know if it's all bad news. The agency recently, in a final rule, changed the maximum rates that will allow lenders to charge. Now, lenders don't have to charge these maximum rates. So make sure you understand the slide. We at the SBA don't tell lenders exactly what to do. We just establish ceilings, and we tell lenders they can't do bullet loans and they can't charge points. So there's a lot of things that we sort of tell lenders they can't do when they're using our program to get essentially an insurance policy to make them have less risk. One of the things that we do is we cap the interest rates. So in the past, about 6 months ago, we had different maximum interest rate ceilings, different programs and different loan amounts. And as part of an effort to simplify the ceilings, we sort of distilled it down to this little table. So there's no longer any difference between different programs. What you figure out the maximum interest rate that a bank can charge just purely with numbers, the amounts of the loan. And in some cases, the ceilings are lower than they were in the past. In some cases, they're higher. In particular, on the very small loans, we're allowing lenders to charge a little bit more, sort of to compete with what's really a very lucrative market for lenders. They charge high rates on credit cards that they offer businesses. They do prime plus 20 or whatever. So to induce them to do more SBA loans, which are much, much better deals than credit cards, we are allowing lenders to charge a little bit more, which is Wall Street Journal prime plus 6.5 for the smallest deals that we guarantee. But a typical SBA deal is not at the max. A typical SBA deal is prime plus 2, which should be, somewhere 6-7% or so. That's what you should sort of project to pay on an SBA loan.
Great. And let's go to the next slide. Yeah, and Ray, you might as well carry on with this since this is having to do with fixed rates.
Yep, we will allow lenders to charge a fixed rate as well. They can fix a rate all the way from inception to term. That rate, the fixed rate, is determined in a table that we publish once a month. Most lenders tend to use the variable rate schedule rather than the fixed rate schedule. But if you are, looking at doing an SBA loan with a lender and you're interested in fixing the interest rate, which a lot of people are right now, we also we have a ceiling on that as well. It's a little bit different than the variable rate caps. We'll allow lenders to charge a little bit higher if they're willing to take the risk of fixing the interest rate. But you should be charged well less than a base rate plus 8% on an SBA fixed rate loan. Usually, again, it's going to come out to 7-8%, something like that.
Yeah, and our old policy used to be tied to the maturity of the loan or the term of the loan. In other words, if it were 7 years or longer, we would allow higher rates to be charged. For less than 7 years, lower rates. But we've departed from that. We've gone to really a pricing based upon size of the loan. Next slide, please. Yeah, credit matters. And here again, we come back to Steve Schillig here. Promise of repayment ability is a must, and that can be based either on historic or projected earnings. About a third of what we do in any given year goes for new businesses, meaning startups. And so startups need projections, and they need credible projections. And that's where the SBDC figures front and center there. With regard to startup businesses, we do have a requirement now that at least 10% equity go into the business. We can do partner buyouts where an existing partner will buy out the other partner. And what we're requiring here is that the balance sheet indicate no greater than 9-to-1 debt to equity, and that the partner buying out the other partner has been in place in their current ownership position for the last 24 months. So if in a partner buyout situation, you can get by without additional equity injection, assuming the bank wants to do that. If we're talking about a pure startup, then we require at least 10%. And again, the lender can say, hey, I'm not happy with 10%. I want more than 10%. It's really a bank decision there. Ray, did you want to chime in on that?
No, sir. Please go ahead.
Okay, next slide, please. Yeah, loan uses, working capital, equipment purchase, whether it's new or used, real estate, and I have in parentheses here owner occupied, because if someone's buying an existing building and they want to occupy at least 51% of that, then we consider that to be owner occupied. They can lease out the balance of the building there. If it's new construction, ground up, we're going to say, hey, the borrower needs to occupy at least 60% right off the bat and grow into an additional 20%, I think, within 3 years. We can do leasehold improvements. We have no problem with that. We can refinance debt. We do have a few tests that apply there when a bank wants to refinance either its own debt or another institution's debt, but we can do that. And buying a business, whether it's a stock purchase or an asset purchase, we can do that as well. Next slide, please. Related sources to the SBA. We do have a network of micro lenders out there. They've gotten a chunk of money from the agency. Some like ECDI, which stands for Economic and Community Development Institute. They're based in Columbus, but they've got offices in Canton and Akron. They make loans directly, and they specialize in loans under $50,000. They play a valuable role. We make a lot of referrals to them, especially to startup businesses and businesses in need of modest amounts of capital. Community Advantage is another program related to the SBA. And here, a not-for-profit lender like ECDI, because they participate in Community Advantage, they can make loans to borrowers up to $350,000 with an SBA guarantee attached to them. All right, so we do have SBA finance programs that fall outside of traditional lenders and bankers there. Ray, did you want to jump in on that?
No, I don't think so. Please go ahead.
Okay, next slide, please.
Mark, before you move forward, we have
Sure.
3 questions. One is looking for the contact for Belmont County, the SBA contact for Belmont County. Maybe you want to talk about the process for an SBA loan, and then I have 2 other questions after that.
Well, ordinary SBA loans, are bank loans that somewhere in the underwriting process, get turned into SBA loans. So you really start off with a bank and see if they want to do your deal. And if they want to do your deal conventionally, that's great. If they want to do your deal with the SBA, that's fine too. They'll interact with the SBA. The borrower doesn't need to. The borrower needs to supply information and sign a few forms there. As far as Belmont County is concerned, that falls into our Columbus or Southern Ohio district office at this point, and you can contact them directly to follow up with create more information about who's active in the Belmont area.
Okay, question number 2, are there certain credentials needed for an evaluator to analyze the worth of a business?
Yeah, in our policy manual, it kind of gives a list, but generally speaking, just about any CPA, let me generalize. Most CPAs would be in a position to do that.
Okay. And then the final question, the promise to pay is based upon the owner's personal credit or the business credit?
Well, if we're talking about a startup situation, it's going to be based on projections, and it's going to be based on revenue of the business, revenues and profitability there. Where personal credit enters the picture, we do pay attention to that. And we do have a program for loans up to $350,000. It's called small loan. It's not express, it's regular 7A, and we do credit score those loans. And so low personal credit score will, figure into that significantly as to whether the SBA is going to do that deal or not. So, again, personal credit is part of the credit decision process, regardless of the business.
Thank you.
Okay, lender match. SBA has tried its hand at bringing together would-be borrowers with would-be lenders, and we call it lender match. And you can find it at that web address that I've given there. It's rather long, but you as a potential borrower or borrower can upload your request, your profile, and then on the other side of the cyber wall are a number of lenders who have signed up for this program. And if they like what they see, they will get in touch with you. So that's where the matchmaking comes in. I saw that Steve Skaggs was on the phone. I'm not sure. Does Peoples participate in Lender Match?
Yes, we do.
So there are a variety of lenders out there, including Peoples. And again, this is a way for a would-be borrower to test the water, so to speak, and see if there's anyone interested in the deal. Ray, did you want to comment on that?
Sure. I mean, Lender Match, I think, is a really good system. If you go out to the SBA.gov website and you click on that Lender Match and submit your profile, it's going to go out to hundreds of lenders, and many of them are out of state. You'll have folks from Florida and Texas and so forth that are opting into deals, and just make sure you're kind of prepared for that. Personally, I think sort of the first best alternative for folks when they're looking at getting financing is to go to the lender where they have a relationship, or a lender that's convenient to them, or get word of mouth referral from friends and family and other business owners, because I think that personal connection really makes a great difference. So I would do that first. Lender Match can also be very useful if you want the broadest broadcast possible, but just do note that you'll have a mix of responses from local lenders as well as from maybe folks that are out of state. So just be aware of that.
Mark, Steve again. Are there hard pulls on credit score for this?
For Lender Match?
I'm assuming just the standard SBA loan. Yes.
Oh, well,
yes.
Yeah, as Ray indicated, the bank, as part of their routine underwriting, they're going to pull a credit bureau.
But they shouldn't be doing that without your consent. So, for example, if you're doing Lender Match, it's not pulling your credit report. The Lender Match is simply a portal that's referring profiles of businesses to lenders who are interested in that profile of business. What happens after that, is the relationship between the borrower and the banker. They might send an email to you saying, hey, we're really interested in your, multi-million-dollar veterinary clinic. And we'd love you to sign this form so we'll get a personal credit. And then you have to make your decision then. Am I going to go ahead and let this person do that and sign off on the form, et cetera, or not? And of course, we recommend being pretty sure which lender you're going to go with before you allow them to pull credit, because you don't want them to be pulling credit too much. So.
Okay, next slide, please. Yeah, SBA also guarantees surety bonds. All right, we've talked about our guarantee on bank loans, but now we're shifting gears here. And we do have a surety bond program where we can guarantee surety bonds, bid, payment, and performance. And I want to bring this up because there's a lot of emphasis on construction, infrastructure, repair. So just be aware that SBA can help a borrower or another type of business that needs a bond to be helped out or assisted through this SBA program. And we run it through insurance agencies. We have a number of carriers that actually underwrite the deals, such as Nationwide Insurance. But it starts with the insurance agency and their willingness to do the deal with the SBA guarantee on the bond. And I've included the website or the web address for the surety bond programs. So if we have some lenders out there, and I know we have some lenders out there, if you've got contractors in the portfolio and they may need a boost in this respect, please remember the SBA here. Ray, did you want to chime in on that?
No, the only thing that I would add there is we're expecting a lot of infrastructure, development, as a result of federal spending bills, and we're hopeful that many new contractors will get involved and maybe utilize the surety bond program to allow themselves to move forward.
Thanks. And the next slide. Yeah, and Ray's email address is raymond.graves@sba.gov. All right, so there you've got mine, but it would be for Ray, raymond.graves@sba.gov. Ray, did you want to add your phone number?
Sure, I'll just drop it into the chat.
Okay, great. Okay. And that concludes our part of the presentation.
Well, thank
So I'll
you,
turn
Mark.
it back to Steve.
Okay. Thank you, Mark, and thank you, Ray. Lots of good information, and another thank you to Randy for the valuable information he provided. Just again, a reminder that this session was recorded. We'll have that available probably in the next week or so. These slides for both presentations will be emailed to you shortly. So we've gone through a couple different programs. We've talked about the SBDC, we've talked about the USDA and the SBA. Where do we go from here? What are the next steps? I would certainly encourage those that are not working with an SBDC or have in the past to reach out to your SBDC and also your local banker. They're a wonderful resource for you as well. So my parting words, my words of wisdom for today are: there are lots and lots of resources available to the small business owner. You need to find out what those resources are and take full advantage. So again, I think we've handled most of the questions, if not all of them. I want to thank you again for joining us today, and have a good rest of the day. Thank you.